You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with the option block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of unusual activity. Mix it all together, and you got the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Reminding you guys here, if you like what you hear, this show, any show we do here on the network, make sure you keep those comments, those ratings and reviews coming on wherever platform you listen to our stuff. Could be the app stores, could be the various major podcast platforms. Wherever you get it, keep rating and reviewing so new folks can continue to discover the content. Of course, keep those questions coming too. We do love to hear from you guys. Let's see who we're hearing from on the old program today. First, let's go out to the quiet, the sleepy, nay, the tranquil hamlet of St. Charles, where nothing much ever happens, really. Everyone's just very sleepy town, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
You know, I have to agree, we are a very tranquil town, but stuff happens here. There's actually a podcast going on right now called The Option Block, and outside my office right now, I have probably, in my estimation, maybe 16,000 fans screaming our names and chanting. There's banners going up everywhere, and it's a lot of excitement in St. Charles when the option block is coming on Mondays and Thursdays.
Only 16,000. I expected at least thrice that. But hey, I guess it's a slow start to the week.
Our population's only 20,000.
That's true. We'll take what we can get. We'll take the vast majority of the folks out there in the land of St. Charles. Let's see if similar throngs of adulation are gathering way down deep in the heart of Texas, where we are joined once again from Austin, the land where they're trying to keep it weird. We are joined by the greasiest of meatballs, the tastiest of briskets, the spiciest of chilies, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital, by way of Little John, by way of all sorts of fun stuff. Mr. Meatball, welcome back to the program, sir.
You know, I got to say, Austin was the perfect place to move for for experiencing the YOLO trade now that YOLO has blown up. Yeah, it's been, I'm doing great and I'm enjoying this and I'm watching the YOLO.
Is that what GameStop is? That's a YOLO? You only live once, so throw the dice on GameStop. I guess we'll get to it as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, let's get to it. It's another weird one here to start the week. Most of the major indices pretty much mixed. S&P is kind of flirting with unch on the day, slightly red, but nothing really to write home about. NASDAQ, as it is wont to do, it's bucking the trend. It's up almost 0.2%, not quite there, but still, it's a day that ends in Y. It means NASDAQ, it's got to be green, right? And the old school Dow off, leading the charge to the downside, not quite 0.5%, about 0.4%. That means all of our friends on the vol space feeling a little bit of their oats today, feeling a little bit more surgy than they were on our last show, to coin a new phrase out there. Come into Showtime, VIX Cash was at about 24.25. That puts it up about 2.5 points from our last shows. Everyone's talking about the fade. Everyone's talking about the erosion. Everyone's talking about VIX maybe finally breaking that 20 handle. Not so much today. Listeners, 24.25 come into Showtime. VVIX also feeling frothy again, up to 121. So back up around that 120 level that we were keeping an eye on for most of the pandemic era. Puts it up about 7 points from our last show here. VXX coming into Showtime, 1735. So back north of the 17 handle. Puts it up more than 0.75 of a point from our last show. So again, people have been flocking into that front portion of the curve. They've been flocking into the fade. We've been saying it for a while. Those VIX puts and even VXX puts have kind of been a place where people have been going to die of late. And that, at least for right now, is continuing to be the case. A lot of puts going out worthless right now. Vol Q also keeping the vol juice alive at about 25 even. Coming at Showtime, puts it up about 1.25 points from last show. But we got to get right to it. You know, the story of the day, story of the week, story of the new year that is 2021 is this just mad dance that is going on in names like GameStop. We've seen it now expand to others. In fact, it's so funny. We were talking not that long ago on the show, back on September 10th to be precise, about the death spiral that was GameStop and Bed Bath & Beyond. We even did a poll for you folks. It was a flash poll during the show. And we asked you, gun to your head, if you had to buy either one of those right now, which one would you buy? 82.8% of you said GameStop. Turns out you were right, but Bed Bath & Beyond is now feeling, I think, what Mr. Meatball calls a squeezy McSqueezerstein as well. It seems like the one-lot folks, the retail folks, to call them what you will, are just lining up on these heavily shorted names and just driving these shorts pretty much to the brink of oblivion. Easy for me to say. Back to last show, we were talking about GameStop was soaring north of 60 odd. It seemed insane. It threatened 150 to 150. Just insane times are afoot out there beyond any sense of rationality or reason. I was looking at analysis this morning before Showtime. This is when they were breaking it down from some old numbers of $65 a share, which was lofty. And even at that level, stock was already $53 above the consensus average of all the Bloomberg analysts out there. It was 426% above what was a reasonable stock target. And that was at $65. It hit more than double that today. So all analysis, all rationality is out the window. I know our audience, they like to fade something crazy like this. So I was glancing on your end just before show, see what some of these options are trading for out there. And let's say you want to do, a reasonable fade. Let's say just a March 50 put. Nothing crazy, nothing nuts. You want to fade some of these. Think it's going to come back down. Give yourself a few months for that to pick in. Well, I hope you're willing to pay $19 because that's what it was trading for right before Showtime. If you're wondering, that's a nearly 200 volatility, 194% volatility. So that's what we're working with. That's what we're playing with here today. It's the mad mother of all short squeezes. That is GameStop. Let's go out to the land of the squeezy McSqueezerstein first. Mr. Meatball, I'm sure you've been watching this. We were talking about this on the show last week. It's obviously just spiraled to new lofty / insane heights since we've talked about it. What's going on with your Little John folks? And what are your thoughts on the madness that is GameStop and just, I guess, squeeze mania squeeze mania that is seizing the retail masses? And then B, outside of that madness, what else is lighting up your tape, sir?
I mean, it's polluting everything, right? GameStop was up over 115. What'd you say, 150 at the highs?
It got close to it.
You know, you're right. Yep, got over 159. And it's now only up $7. It's completely turned around, but it's polluting into all these other names that shouldn't be valued where they are. Bloodbath and Beyond was trading almost 50. It's back down to 32. You've got names like Dillard's that had blown up that are heavily shorted. Macy's was, over $16. It's still up 11%. And then, I think next up, and then you've got kind of your cheap dollar names that they're YOLOing. AMC Entertainment, some of the craziest option activity I've seen. Almost 100,000 of the Jan expiring this Friday. 7 calls have traded and those are 40 cents. You're talking a near doubling of the stock, and you're playing 40 cents. Well, guess how much the $4 calls. The $4 calls. So AMC is $4.30. The $4 calls are 80 cents. The $7 calls are 40 cents. and it's like, okay, maybe you people need some educating on how this stuff is actually supposed to work.
You just throw your chains away, throw your Greeks away, sir. Dogs and cats living together.
I mean, that upside, Nokia is another one that they're going after. Nokia, BlackBerry, they're all BlackBerry's up 17%. Nokia's up. But like I said, AMC is the next YOLO. So watch out for that one, folks. CEO came out today and said, hey, guess what? We're not going bankrupt. And markets are loving it. There is just all kinds of trading opportunity here. The one I've been throwing on was like the Feb 4-7 call spread that I can purchase for 40 cents, even though it's 30 cents in the money. You shouldn't be able to do these types of things. And I gotta say, I'm enjoying it. There's some, if this is what you want to give me, I will take it. But folks, this is bananas nonsense, to say the least.
Just when we thought we had seen it all in the year that was 20. Apparently this kind of percolated off in the dark corners of Reddit and a few other areas where these chat rooms lurk. And apparently they conspired to just start squeezing I don't know. Sometimes they elicit motives to these groups that, sometimes are just more kind of just general trends out here. But still, it is fascinating to watch. Aside from the squeezy McSqueezersteins that are just turning the options world on its head, Mr. Meatball. We're also seeing a little bit of vol come back into the markets today. What are your thoughts on that, sir?
Yeah, my traffic light that I use is starting to flash. Vol, it's been saying short vol, short vol, short vol. Today, it's saying, you know what? Maybe you should rethink that approach, because some of my indicators are really starting to say, there's potential for things to turn around quickly here. So it's definitely a little bit of a weird day. The vol is way outpacing the underlying. I mean, it was kind of driven by this morning. We were up about $10, $15, and in a matter of about 2 minutes, we dropped 50 points. And the last time we saw one of these weird middle of the day, no reason sell-offs was almost a year ago today, when on a Thursday we had a weird middle of the week sell-off. And markets really never saw that high again. So obviously, I'm a little bit wary of what I'm looking at, and that's what I'm seeing right now.
Yeah, it was about a year ago that all the madness started really popping off in earnest. Listeners started seeing some of these spooky sell-offs. Listen to some of our year in review shows. We broke all that down on a lot of different capacities: the advisor's option, volatility views, you name it. The option block, but that's just really when it started to get a little spooky out there. And go back and listen to some of those shows. Some of the numbers we were talking about just from the cases here in the U.S., suspected cases. Oh, there might be a case here, a handful of cases. That alone, just that rumor was enough to send the markets into a tailwind, let alone horrific numbers that we've all kind of just come to gloss over in our daily trading now. It seems kind of quaint in retrospect. Let's go back out here. Atlanta, that's always quaint. It is St. Charles. When things get a little dark, things get a little twisted, things get a little topsy-turvy, I turn to St. Charles to turn me right side up again and restore my faith in the world. Mr. Uncle Mike, sir, what is lighting up your tape on this day when the markets and indeed a lot of single names are completely upside down, sir?
Yeah, this is definitely a unique day. This is how unique the day is I'm getting calls from clients explaining to them option pricing factors because like right now in my aggressive strategy, I have some to where I'm long some premium, short some premium, and various different things that I'm in. But the long premium has just skyrocketed from the standpoint that I literally just got off the phone with a gentleman probably maybe 45 minutes ago, and he calls me up. He's like, Mike, I'm not complaining. So please don't take this as a complaint, but why is our account up right now when the Dow's down 120 points? And so it was just kind of a situation where I broke it down. I'm like, okay, well, we have some money in this, that, and the other. This is doing well. This is doing not so well, and just kind of broke everything down. But the one area with which was unique was the SPY calls and puts that we have on. Is that when the market was down, I have one of my out of the money call options is just up a lot right now when the market is down. And so obviously it's just a spike in implied volatility. That's what's happening. It's something that you really don't see very often, but it is possible. You have 6 factors of option pricing. And if all other factors remain constant, if implied volatility goes up high enough, call options going to go up in and of themselves just on implied volatility. And that's what's happened today. So it's definitely a unique day from that standpoint, and that later in the day today, I have been all morning just looking for other opportunities to take advantage of this. But when looking at something like this, you just always have to have the understanding of anything could happen. And when we did have the sell-off, I would say it was roughly around 9:45 Chicago time for roughly a 20-minute sell-off. The account really didn't move all that much to the downside, even though we had close to a 60-point move in the S&P 500. And so it's definitely a weird one, to say the least. And when things like this happen, you just have to have an understanding of how the option product works and where you want to position yourself when different things happen. So that's what's kind of lighting up my world today. I was thinking maybe early in the day I might get my opportunity to say one of my never before in the history of the entire stock market quotes, but couldn't quite do that today. But I would say definitely in the history of the entire stock market, there's never been a day. Well, there's plenty of days that have been this weird, but this is definitely one of the weirder ones, to say the least. And that's what's lighting up my tape today.
And that's saying a lot because we've all seen some collective weirdness over the past year. Let's see what this weirdness is amounting to in terms of paper hitting the tape out there right now. And there's a lot. Let's just, spoiler alert, some paper hitting out there right now. VIX is kind of the laggard. VIX is 375,000. Now that's good compared to its ADV, which is only 469,000 contracts, but still not blowing the doors off quite yet. SPY doing some more paper compared to its ADV. It's at about a little north of 3 million, about 3.1 million right now. The ADV is about 3.75 million. The S, 876,000. It's already closing in on its pretty anemic ADV of 1.15 million out there. The Q, 768,000. The ADV, 938,000. And the Russell, IWM, 551,000 contracts on the tape. Seems like everyone's caught Russell fever of late out there, and that one's doing some numbers. ADV, a little bit north of 700K. Let's get to the crazy town land. Let's get to the single names, because this list these days, it's an interesting one. Let me just put it that way. Some names popping in there that we haven't seen in quite some time, and others that you might not expect. Number 10, though, we do expect. Number 10 manages to slug it out and stay in there regardless of whatever else is going on out there. It's AMD. By the way, it cost you 367,000 contracts to break into the top 10 today. That's how much paper is going on out there in these single names. Usually that's good for, number 4, maybe even number 3. But number 10 today, and that's AMD putting up some numbers. Number 9, this perennially sleepy also ran of a name that we were just joking about on the show not too long ago about how it toppled all the big names out there. Ford, still doing some paper, 399,000 contracts. You know, that little melt up Ford had up to 11 and change. That seems, that seems in retrospect compared to some of these other ones we're seeing now, pretty tame, pretty mild. But it's good for almost 400,000 contracts. That's only number 9. Number 8, NEO. NEO's got to be up there somewhere, and they're doing some paper today. 574,000 contracts on the tape, and it's only number 8. So some stuff is clearly popping off. Number 7, listeners, is the one that's going to blow your mind. Number 7, not number 2, not even number 1. Number 7 is Tesla, where we find the T name today. Yes, all the way down at number 7. That's how crazy of a day we have in store for us today. But still doing some crazy paper, 781,000 contracts. Usually, you listen to the show, that's good for number 2, probably, maybe even number 1. Not today, listeners. No, it's trumped by many names, including number 6. This is the name I always jokingly say is on the top 10, but I really mean Bed Bath & Beyond. But today I actually mean it. It's BlackBerry. 789,000 contracts. I guess they're caught up in this mad short squeeze as well. They're up 20.5% right now, trading nearly $17. And 5 days ago, they were trading 11 and change. So they're on the upswing, on the rampage. Good for 789,000 contracts. Number 6 on our top 10 here. Number 5, the aforementioned AMD. Are they going the way of the dodo? Apparently not, at least according if you believe what their CEO is saying. If you like the meatballs vertical out there, have at it. Either way, it's trading $4.42 right now, and it's good for 902,000 contracts on the tape. Number 4, another name from the past. Think Snake and candy bar phones. Nokia, 938,000 contracts on the tape. Let's just see really quickly where this bad boy is. This one's trading $4.68. I'm starting to get a theme for these names. They're gobbling up every freaking cheapy name that they could find out. This thing was trading, not that much lower, $4.16. So comparatively lower. It's still up 11.5% today. Good for 50 cents. Number 3 is another one we've been talking about a lot of late. Palantir, off to the races yet again. Let's see where that one's trading right now. That's good for 1.01 million contracts, and the number 3 spot on our top 10, trading $33.81 right now, up about $1.25 or nearly 4%. Number 2, you can probably guess it. Yes, it's GameStop, just edging out Palantir. Palantir is doing almost as much paper for all the headlines GameStop is getting for the squeezy McSqueezersteins, the mother of all squeezes, call it what you will. Palantir right neck and neck with it. GameStop, 1.04 million contracts on the tape. I mean, if you had told me that a week ago, I would have laughed at you, let alone today. And that means number 1 with a bullet, still the big dog, Apple, kind of showing all the other little kids, you go stay at the kids' table. I'm going to stay at the big dog table. 2.08 million contracts, exactly double what GameStop has already put up today. So Apple's saying, hold my beer. I'll show you how it's done, kids. This is just insane numbers, no matter how we break it down. Speaking of insanity and Tesla, because we were just talking about them as well, before the squeezy McMadnesses embraced and engulfed the market today, the internet, you probably noticed it over the weekend, listeners. Twitter blew up with this other notion of Tesla. Yes, a weekend Tesla internet controversy. What's new? I got you. But this one was the old speaker, Miss Pelosi, apparently has a little bit of a taste for some meaty Tesla options. In particular, folks are slinging around this disclosure filing that showed she bought 25 Tesla March 2022 500 calls. So pretty beefy, pretty meaty. And people were speculating. I saw the internet was on fire. A lot of people have no idea what the hell an option is, saying, what does this mean? How could you buy a strike that's below the opposite? It was a lot of madness going on about this. So we thought we'd parse it. We went and dug up her trade for you. We found her 25 lot. It went up back on D22nd here. She paid $227.67 for these 500 calls back when the stock was, where was it? $625.29. So she paid roughly $1.02 in extra juice out there. If you're wondering, listeners, that's a and a half vol that she paid. Now, pretty savvy trade for the Speaker of the House to say, this stock's kind of juicy, but it might have some more upside. I'm not going to fade it, but I also don't want to ride it all the way back down to the basement. Let me go for a little bit of the old stock replacement type strategy instead and pick up a meaty call. And she spent a total of about $569,000 on this 25 lot. And spoiler alert, worked out pretty well for her. As of this morning, these calls were trading for $450. So she's up about $500,000. So she pretty much has effectively doubled her money. So picking up Tesla stock at a pretty discount. She paid roughly a third of what the stock was trading for out there. Pretty savvy. So whoever's handling her funds, because I don't think this is Nancy logging on to the old E-Trade and buying the 25 lot. Whoever's handling her funds, a little bit savvy out there. Mr. Meatball, did you notice the flurry of madness on Twitter over this Pelosi Tesla news? If so, what are your thoughts? And then B, have any other thoughts on these other names I just broke down that are lighting up our tape today, sir?
Yeah, well, that call, it was beefy and meaty. You might actually describe it as, in fact, meefy.
That could qualify as meefy. You are correct, sir.
100% meefy. I've been really impressed. Palantir, under the radar, had a giant move. This thing was 26. Palantir was what, $26 a week ago. It's up 50% in 2 days. So on Thursday it was 25, and at one point it touched $39 today. So just a crazy move. Lots of activity, like we said, in AMC, in GameStop, in Bloodbath, and beyond. It continues to shock me. So, and Nokia, Nokia and AMC are like, everyone's like, are these the next YOLO names? Is BlackBerry the next YOLO trade? That is what everyone's after, is the YOLO, trying to find that YOLO return. And AMC a little more news driven because they're not going out of business. Nokia and BlackBerry seem a little bit less sensible. And I don't know what the deal is in Palantir. Ford is another weird one, right? Why are they blowing up? I mean, is it an EV play?
I guess everybody loves the Mach-E, sir, and the Bronco.
Yeah, well, the Bronco. I mean, who doesn't like the Bronco? You see the picture of OJ with Bernie's mittens on?
Bernie's been everywhere this weekend. Was he with OJ too?
Yeah, no, they did the one where he's holding up the gloves, except they covered his hands with Bernie's mittens. That's a good one. It was pretty funny. Yeah, I mean, some of these are nonsensical. I mean, the moves in like names like Dillard's, really? Macy's, but not seeing similar moves in a name that actually is financially stable, like Nordstrom. So it's a little weird today. There's a lot of chasing. And anything that's got heavy short interest is running hot today. So go through your hard to borrow list, and I will, I'll take it's up, you take it's down, and we'll do 1-to-1 trading, and I will be up a lot of money because everything with heavy short interest is up today.
Yeah, they're just coming for all of it. Let's see really quickly before we get out to the outlook. By the way, those of you asking, where's the 80s theme? It's so busy, so much crazy is popping off today. I actually neglected to queue up an 80s theme for everybody today. So we'll do that again next week. Don't worry, listeners. Hopefully, maybe next Monday. A little bit less madness afoot to kick things off. Speaking of madness, if you want to sink your teeth, maybe away from the madness and sink your teeth into something a little bit more, maybe more analytical, maybe more rational, perhaps. You never know these days. Then you got earnings popping off. You know where to go for all this data, completely free of charge. TheOptionsInsider.com. Click on the Options News and Articles tab. Top right corner of the page, you get the earnings move results, and the earnings season reports for you. All there, courtesy of our friends in Orat's land, propping off a lot of names over there coming off this week. Just a few to look at really quickly. Tuesday's a big day. Johnson & Johnson, GE, We got Amex, AMD, a perennial top tenner out there. Good old softy on Tuesday this week. Starbucks as well. Wednesday, Boeing, our friends across the street here. AT&T, Apple, some name Tesla. I don't know. I've never heard of either of these two really. And then Facebook on Wednesday. So Wednesday's a big day for a lot of you folks out there. Thursday, American Airlines, Mickey D's, MasterCard, Sherman-Williams for all you folks. Sleepy names can be hot these days. Who knows? Maybe paint is going to be the next hot thing. Who knows? Southwest Airlines, MDLZ. We'll be talking about them in a little bit, I believe. Friday, we got Caterpillar, Eli Lilly. Let's break down a couple of these really quickly. Here's the earnings report we have right now. It just came out this morning, hot off the presses for these names. Let's go to Microsoft first. They're popping off on the 26th. They were pricing in, or they're trading, I should say, as of this morning, $225.95, so right about $226. They were pricing in $10.09. Get this, listeners. In the past, they've traded and earned $5.74. So a lot of extra juice coming in the land of Microsoft. That's interesting. Starbucks, same day, they're trading $103.91 as of this report. They were pricing in $4.11. In the past, they moved $3.48. So a little bit extra juice in Starbucks, but a lot of extra juice in Softy. Let's see what our friends across the street are up to. Boeing, $205.84. As of this report, they were pricing in $8.52 into that earnings straddle. In the past, they moved $6.33. Facebook, they're on the 27th. $274.50 is where they were as of this report. They were pricing in $18.10. In the past, they moved $18.02. So Facebook, oddly in line with recent developments out here. Apple, a name a lot of you guys like to watch. Let's see, $139.07 as of this report. They were pricing in $9.10. And get this, listeners, in the past, they've moved $6.58. So a fair amount of extra juice over there. And Apple, since we're talking extra juice, we can't leave Tesla behind. Tesla was $846.64 as of this report. But don't like that price, just wait 5 minutes. It'll move. They were pricing in $75.42 for that earnings straddle. In the past, they've moved 66.25. So more juice, but perhaps not as much juice as you might think, given all the madness that's going on out there in Tesla land. We also have the season report and everything else for you. You can't beat the price. It's completely free. And there's really nowhere else you can go to get this data. So check it out, theoptionsinsider.com. As we head on into our next segment, it is time to get weird. It is time to get wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. It is time to unleash our Eye of Sauron. You don't have to look very far to find weird paper today. I think anyone can play this game today, but we'll look a little bit farther afield beyond the GameStops and some of the others to find some other weird things afoot. Our first stop, our Eye of Sauron has fixed its gaze upon Mondelez International, ticker symbol MDLZ. These folks actually are local folks, Chicago here. Of course, they do food, confections, all sorts of fun stuff out there. Trading right now, $56.96, up about 71 cents. So in today's squeeze mad market, not much. Let's look at the sordid tale that is the past year for Mondelez. A year ago, they were trading pretty close to where they are right now. They're trading $54.69, so about 230 below where they are right now. Right before all the madness of last year, they peaked right around $59.66 at about February 18th. We all know what happened after that. It sold off. It sold off down to $41.19. It hit its nadir pretty quickly on March 23rd. And this one kind of came roaring back pretty quickly. By April 14th, it was trading $54.50 again. So it rallied quite a bit. But then it kind of gave some of that up. It got down to about 49 again, and then it rallied a few times again. But by looks like July 29th, it had stabilized around the mid or so 50s. Hit 56.79 on July 29th. And then it rallied up to about 59 even on September 2nd and kind of bounced in this valley here from about the high 50s down to the low 50s throughout most of the rest of the year, pretty much until right now. It's pretty much still where it is, right around $57. So let's see what our Eye of Sauron found out here. Looks like it found some action, some paper out here in good old MDLZ to the tune of the Feb 57 halves, going up. The first print that we noted was 7,377 of these Feb 57 halves, going up for $1.12, kind of splitting the uprights there. They were printing, I should say, 47 cents at $1.60. Then we dug a little bit deeper, and they actually traded a little bit earlier, about almost 3,000, 2,700 of them going up a few minutes earlier when the options were 94 cents at $1.07, and they took all they could for $1.07. Then the next print came, and obviously they widened out the markets, and that's where we get that. Where sometimes you have to read between the lines, listeners, in terms of what is going on from an execution perspective. So they obviously saw the market makers, they were starting to gobble these bad boys up, and they widened out to get a little bit better offer on these. That first lot was about a 25 vol, the next one coming in about 25.6. So the vol creeping up a little bit on these MDLZ. By the way, MDLZ does have earnings coming up. They are on the 28th, so they are within the lifespan of these options. If you're wondering, they were pricing in, let's see, was that about 56.98 as of a few minutes ago? They were pricing in not quite $2, $1.85, and in the past they've moved $1.71 out there. So a little bit extra juice on the tape for MDLZ, but not a ton. Mr. Meatball, it seems like someone is loading up on some Feb now, pretty much at the money calls here, in right ahead of earnings in MDLZ. They've done a few more since then. A total of about 12,600 have traded on this strike. I think this is our old friend, the earnings. I wouldn't say this is a swing for the fences. This is more like I'd say bunting / swinging for like a double, sir. What do you think of these MDLZ earnings calls, sir?
Well, if Mondelez is behind wrap snacks, I think this is a nice trade. If they're not, then I don't know. But Mondelez is one where it's been a bit of a stay-at-home snack trade. I'm very, very interested to see where they go as people kind of go out. But they've got a huge international business. Again, especially if they developed wrap snacks. I'm not sure if you've seen. Have you seen wrap snacks, Mark?
Is that like fruit by the foot?
No, it's literally like Cardi B's, jalapeno cheddar potato chips. It's wrappers.
Oh, literally wrappers making snacks. No, I have not. Correct. I have not seen that.
So yeah,
wrap snacks. What an appropriate name. Leave it to the meatball to keep us apprised on the latest in terms of the intersection of pop culture and snack food. All right, we're going to keep on rolling out here. This looks like this might be the largest kind of single name print we're going to profile today. One of the larger ones hitting the tape out there today. This isn't another cheapy name, so maybe keep an eye on this one. Folks liking their cheapy names these days. This is Sirius XM, ticker symbol SIRI. No, not your Apple assistant. It's good old Sirius XM here, ticker symbol SIRI, trading $6.06, up about 9 cents out there. This is the name that a year ago was trading $7.12, so a wee bit north, and then in the great nadir after February 20th, it just took it on the chin, got down to $4.11. Then it eventually fought its way back on that day we always like to talk about here on the show, June 8th, when so many names kind of topped out and then kind of gave up the ghost. It hit $6.52, and then it kind of turned right back around again, and by September again was trading $5. So it had an interesting run, then it rallied again. You think, the stay-at-home time might be interesting for them. Folks want more content, but also I guess they're not in their cars as much either, which I know is a big vector for Sirius. So perhaps leaning on them. Either way, they traded back up to about $6.50 back in December of last year. Then they kind of gave it up again to where they are right now. They actually got down to $5.80 recently, and then back up now to right about the $6 level. So it's kind of been a shrug of a shoulders year out here for Sirius XM, but that's not the case today. They're not shrugging. They're on fire today out here in Sirius XM. It's a call palooza. In particular, it's the Feb 6 halves that someone is just coming out guns a-blazing for out there right now. Someone had to have these bad boys, and they're taking them. They're taking them all. We saw a block first caught our eye when these things were a nickel at a dime. 14,000 of them went up for a dime. And then the market makers heard those words that always would send just a cold shiver down your back. The broker says, how are they now? And then you're like, oh my God, what have I done? I've just stepped in front of a large train. I got a feeling some of our folks here felt that same feeling, more in a virtual capacity. Obviously, the brokers not standing in front of them anymore saying, how are they now? But it's the same thing, because all of a sudden we started seeing more and more print to the tune of 3,048 for 19.9 cents and 2,866 for 30.9 cents and 2,719 for 20 cents and all sorts of different prices, obviously getting higher and higher. That first chunk, by the way, is about a 44.5 vol, and they started getting up to 58 vol really quickly, which is another sign that someone's gobbling these bad boys up. A total coming into Showtime of 82,000 of these Feb 6 halves had printed by that time. So clearly everyone and their mother had to have February 6.5 calls, 80,000 trading for prices I see up to 30 cents. They might have got even higher than that. So a little quick back in the napkin math. You need a little bit of a pop out there in Sirius. Some of these crazy ones up to obviously 680 to get these bad boys to pay off. And let's see, there are earnings. Let's see, but where are the earnings here? They're the second. So the earnings are included in this, and they're coming up in about a week. So I guess we'll all see how wise this 82,000 lot is of Feb 6 halves. Let's see if we can go back out, if the technology gods are smiling upon us, if we can summon the tastiest meatball once again. Mr. Meatball, sir, A, are you there? And B, what are your thoughts on someone, or lots of someones perhaps, gobbling up 82,000 of the February 6 halves in an otherwise sleepy name like Sirius XM, sir?
If I was going to have these Sirius XM trades be a character in Star Wars, they would be Han's YOLO, because this smells at like the front end of a YOLO trade in options. Very similar to some of the things that we're seeing in Nokia, similar to things that we've seen in a few other names. Seems like there's a bunch of people looking for maybe this name to get picked up in Reddit and bid, because this is another name that has definitely within that it definitely fits that profile, doesn't it?
That was my first thought when I saw it. It just it screams it. It has the price level and everything else that seems to attract these retail bull machines. Call them what you will. Just gobble these things up. Anything at these like $6 price level seems to be enormously attractive. I'll have to go check the short interest out here on SIRI, see if it's as much as GameStop was to attract them out there. But obviously craziness. We're going to come back to this one too. We'll go really quickly for this last one because I want to get to Uncle Mike today as well. I know you guys probably have some questions as well. Last one was the one Mark was just talking about, Macy's. Another kind of sleepy name. All of a sudden feeling some gusto, feeling some oats. Just in the last few sessions, it's gone from 12.25 to $15. A little bit off that now. So a little bit of a move out here. Macy's, obviously ticker symbol M. Let's go back on the full year. A year ago, it was trading $16.38. And then it kind of got beaten up a little bit, just to put it mildly. It went from $16.38 when all the madness started hitting. Everyone realized, we're not really going to be going to retail stores in person for a while. So the stock hit $4.38, listeners. And then it kind of languished there. In November, it was still trading $6.25. And then it started trending up by the middle of December, actually, it was trading $11.70. And then by January 14th, it hit $13.86, which is close to where it is right now. Then it sold off again down to $12.34 until it hit today, where it's back up to $14.25. And what did our Eye of Sauron find? A little bit more manageable print compared to the madness we saw in some of these other names of late. It was the Feb 17s going up 3,000 times for 68 cents, lifting the offer. Let's see. Yeah, there were 68 cents at 68. As the day has gone on, more of these have traded. Looks like a total of about 8,400 of the Feb 17s have traded. By the way, someone also has an axe to grind on the Jan 15s right now. 31,000 of these bad boys have traded as well. So it seems like perhaps, Mr. Meatball, YOLO is alive and well. Also in your favorite name, Macy's. What do you think about these Feb 17s and perhaps also the love of the Jan 15s, sir?
I think that's 100% what we're seeing here. Macy's is another one that has heavy short interest. It's another one that, I don't know that it's just that the YOLOs are buying it. It's also, I think a lot of the shorts are covering preemptively to make sure they don't get GameStopped by, one of these groups. And that's the other kind of hidden driver. And I think when we look at what's going on here, we'll find that underneath there was a Citadel or Susquehanna or, some of the like driven algo running these things as well. Because as much as we love to think of the Reddit populace as being able to run a stock up like GameStop from 15 to 115 or 160, I think there's probably some tape reading and algo trading in there that probably made things even more volatile. So that's kind of what I'm seeing here.
Yeah, it's a nice story. It's certainly a nice populist story that the one lot folks are getting together en masse and exercising their power. The proletariat on fire out there against the hedge funds. But you're right, there's a lot more afoot behind the scenes. But it makes for a fun story nonetheless. Let's see what kind of fun stories Uncle Mike has in store for us. It is Monday. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, it's Monday. It's a crazy Monday, but it's Monday nonetheless, listeners. Time to unleash Uncle Mike. See what he has in store for us in terms of options, wit, and or wisdom. Uncle Mike, there are a lot of things to pick in terms of educational topics for today's strategy block. So what is coming across your radar? What is lighting up your tape, sir?
Well, I want to go through the 6 factors of option pricing. I've done this before on the show, but I think it's kind of timely in a market like we have today.
Throw those out the window. They no longer apply, sir.
Yeah, it's all just, yeah, I get it. So let's go through all of them and kind of determine what may or may not have happened with some of your options today because of the fact that it's been pretty crazy. But if you understand the why the craziness happened in the option pricing, then I think it's definitely makes it a little bit easier to swallow, whether you're on the right side or the wrong side of this based on the vol move with which we've had today. So let's start off with some of the option pricing factors. Let's start off with our good old friend Rho. Rho is for interest rates. Interest rates have a direct correlation on call options, and they have an inverse correlation on put options. So in other words, let's say that the Fed were to raise interest rates by a full point, your call options were to go up and are going to go up, and your put options will go down in value. Now, of course, if the Fed did that, then it would cause a lot of market chaos going on, and a lot of other factors would be affected. But I'm referring to the instance if, let's say, if interest rates were to go higher, and it was just in a vacuum and no other factors were involved.
Oh, breaking news. I'm sorry. You didn't see this? The Fed just raised rates by a point, sir.
Oh, I gotta go. So with that, the other factor of option pricing is dividends. If the underlying does not have a dividend, then there's only 5 factors of option pricing. But during a dividend, it is something with which it needs to be looked at in terms of when you need to get out of options so you don't end up taking the underlying, because people sometimes exercise their options early to collect a stock to get dividends. And don't want to get into that too much right now because I don't think that's quite as much of a factor going into today. The other factor that exists with option pricing is time decay, theta. That is where the option every day, no matter what you do, if all other factors remain constant, then the time decay section of your option will lose value every day, no matter what, if all other factors do remain constant. That's the only guarantee with which there is an option trading, is that time decay will go away. Now, of course, if other factors stop that from happening or overcome time decay, then it won't happen. But time decay is working against you at all times. If you are long an option, it's working against you in the extrinsic section of your option, and it is working for you if you are short an option. The other factor with which options are priced is, of course, delta. Delta is the factor that dictates what the underlying is doing. So in other words, let's say that the underlying goes higher, your call will go higher. And if the underlying goes lower, of course, your call will go lower. Once again, this is assuming all other factors remain constant. The other factor with that is gamma. Gamma is another factor from the standpoint that as the option becomes more and more in the money, your delta will become greater and greater. Once again, assuming other factors remain constant, of course. And so gamma is the other factor that relates to option pricing. Now, what I really want to talk about today or emphasize is vega, volatility. Now, an oversimplified version of volatility for those of us, or for those of our listeners that are maybe newer to the option trading world, is that I like to think of it as kind of supply and demand. So let's say that you own a call option, and when you own that call option, the market does not move at all. And interest rates don't move at all. There's no dividends. There is no nothing. Now, of course, there's a little bit of time decay because let's just say it's a 6-month option. So time decay works against your option just a little bit, but now all of a sudden with no market movement whatsoever, the option just goes up a lot. Well, that's an example of implied volatility increasing. If vol goes up, option premiums increase. If implied volatility goes down, option premiums decrease. Now, what would cause such a thing? Well, let's say that option with which you hold, whether it's a call or a put, because remember, the markets aren't even moving in this example, all of a sudden, typically maybe 100 contracts trade per day, open interest of roughly 500. I'm just making up numbers on this. And all of a sudden, Warren Buffett, Bill Gates, and Jeff Bezos all get together in a meeting and decide that we're all going to buy as many of that one specific option as we can. So they all of a sudden get together and decide to buy 1 million contracts in their triumvirate option buying club of that specific contract. Well, if that's the case, then the value of that option is definitely going to go higher, even though the rest of the market does not move, because of the fact that there's supply and demand. If there's more buyers, then the value will go higher. Now, by the same token, let's say that they all wanted to sell that specific option, and that option alone in their option triumvirate secret society with which they likely don't have, if that's the case, then the value of the option will go down. So the bottom line is that if there's more people buying options as a whole, then the value of options is going to go higher. There's more option buyers today. And that's one of the reasons that is the reason with which volatility is higher on the day, because option pricing went higher. If there's more option sellers, then volatility went lower and your option price went lower within that factor. So hopefully that helps a lot of our listeners today that are maybe looking at their portfolios and wondering why on earth is the pricing happening the way with which it is. That is a big reason. And that is the strategy block for today.
Thank you for that, Uncle Mike. Now we have to keep on going to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. And a lot of you have questions. We'll try to get to more of these on Thursday. We'll see if it squeezes. It looks like Marianne88 888 in the chat wants to know if you think GameStop will get to $150. Well, yeah, it kind of got there already there, Marianne 888. As to whether it'll go back there, it looks like it has given up a lot of the ghost. Let's see where we are right now. It's rallied again. It was getting back to the 60s, now back up to 79 and change, up 14 and of course. I don't think any of us are leaning on the 150 level, but hey, look at the options. We were just talking about it. The 50 puts were trading for almost 200 vol, $19 not too long ago, and probably a heck of a lot higher now ever since they got a lot closer. When I looked that up before the show, the stock was a far distance away. So yeah, look at some of our chat from earlier in the show there. Mary Ann 888. People have questions about Apple put to call. So we get to all these, don't worry, on another show out there. Early assignments, a lot of fun stuff. So you get some on maybe Options Bootcamp. If you're liking this show, if you're learning about options, you're kind of new to options here, make sure you join us throughout the rest of the week. Of course, we got Options Bootcamp on Wednesday. It's a big one. I know a lot of you love, as well as Options Playbook Radio. Our Education Wednesday is the perfect show for a lot of you folks, or I should say perfect day really of shows for folks who have questions like that. So stay tuned. Let's go back around the horn. let's go back to the greasiest of Meatball. Mr. Meatball, sir, obviously a lot to keep an eye on this week. What is on your radar until our next show for the option block on Thursday, sir?
It's every major earnings in the S&P 500 outside the banks is this week, all the tech names. So that's going to be driving things. And then we've got the YOLO trade. What's going to happen with all these YOLOs? And I was just reading a tweet. A guy today was up over $1 million, ended up losing 400,000. I mean, it's just unbelievable. Some of the price action that we see, and what's happening there. So those are kind of the two things on my radar. It's interesting when earnings in 6 of the largest companies in the world is being completely dwarfed on the news cycle by a obsolete video game retailer.
Maybe they're not obsolete anymore. Maybe they're back with a gusto. That's what we're all missing here, Mark. The worm has turned in GameStop. They are the new Tesla. Look out above, shorts, because here they come. No longer obsolete. Selling tchotchkes in a pandemic environment in person, that's a hot thing out there. Yeah, if you learn nothing else on this show, listeners, if you're up $1 million intraday on a trade you made, maybe you might want to think about taking some of that off. Just putting that out there, just in case. All right, Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on for until we can gather here together on the option block again on Thursday, sir?
If I'm up $1 million, I'm doubling down, Mark. That's loser talk. No, just kidding. I'm watching the earnings to see what we have coming out on the next few days. Watching to see if we can make new all-time highs in the market, and then just watching my own trading to see how I'm adjusting to this kind of weird day with which we have today, and going with where we're going with it, positioning myself to where trying to be prepared for anything that can happen, because let's be honest, looking at GME today, anything can happen.
I like that. You're watching your own trading. I'm watching my own trading. See what I do. Check it out. Maybe you can learn for yourself. Unfortunately, listeners, that music means we come to the end, at least of this show. But if you need more in your ear holes today, don't worry. Got you covered. I'll be back in about exactly an hour with the crypto rundown. A whole lot of crazy crap popping off in the world of crypto as well. Got the Spikes father joining me on that one as well, Mr. Simon Ho, beaming in from across the pond. He's got some crypto vol products out there I think will be pretty interesting for you folks. So stay tuned. We'll have that as well. Speaking of things that are interesting for you, I know the folks from Demand Derivatives have been on the show with us a lot. They've been supporting the option blog. I want to remind you out there, if you are inclined, you want to get a little bit of a piece of the action, their crowdfunding is ending, I believe, on the 26th. So a couple of days left. It's a tiny minimum. I think it's like $105 is what it costs you to get a one lot. So if you're intrigued, you've been listening to the show, you want to support what they're doing, you want to get a piece of the action for the future. You want to get a piece of an exchange that could be coming to markets near you in the future before the big dogs get a piece of it. There's your chance. DemandDerivatives.com is the place to go. Click on the crowdfunding link. It costs you $105. That's your commissions these days on some of your YOLO round trips. And you've got yourself a piece of potentially the future. DemandDerivatives.com is the place to go for all that good stuff. And where else should you go if you want more good stuff? Let's find out, Mr. Uncle Mike. If folks want also to follow along with your trading throughout the day, maybe just want to contact you and pick your brain on stuff, where should they go? What should they do?
stcharleswealth.com. All my information is on the site. I'm more than happy to work with people. I'm a financial advisor who's not afraid of the option product. And I think I'm going to be on some show related to that tomorrow, but I'll let you cover that one, Mark.
Yeah, I didn't even mention that. We got the advisor's option back this week as well. Got Uncle Mike joining us. That should be fun. As well as, of course, buddy Mr. Amberson from ORATS, keeping all that earnings data I touched on today. They created all. So we'll talk about that and a whole bunch more on the advisor's option tomorrow. Mr. Meatball, sir, all the technology gods are smiling upon you. If folks are intrigued, they want to talk YOLO with you, where should they go? What should they do?
Yeah. So I'm going to be doing an update on what's going on with YOLO Little John Trader on Wednesday night. Make sure you, if you're getting those emails, you're and following me on Twitter, that you're able to register so you can check out everything I'm looking at, everything I'm seeing, and why everything's working the way it's working.
There you go. Check them out. Optionpit.com is the place to go for all that fun. And on behalf of the greasiest of meatballs and the unklest of Mikes and our friends over there at the land of demand derivatives, remember, demandderivatives.com. Get a piece of the action. It costs you pretty much the cost of a one lot in some of these little names. And you get yourself a one lot of something potentially interesting. And, of course, myself, I thank all of you out there for downloading, streaming, subscribing. If you're listening live, stay tuned. We'll pump some fun stuff into the live chat. We'll be back in pretty much exactly an hour to break down all the insane volatility in the world of crypto. And then we're back tomorrow, interview Tuesday, all that good stuff, as well as the advisor's option. See if we can sneak that into the live rotation as well. Education Wednesday, you know what to get on Education Wednesday. Options Bootcamp, Options Playbook, Radio. You guys are just devouring those shows with gusto. And then we're back again on Thursday for episode 2 of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.